us work through this in this kind of concept of, okay, well, Germany may remove their debt brake. It may take them a minute to do it. We may see more issuance, but do they still get digested by this bond market, maybe the way that they have in the past?
I think it ultimately will, because I think what it does is it changes the whole growth narrative around Europe. There's a very, very kind of long established kind of idea of what Europe means, an investment idea, and this will kind of blow that up. And it's this idea that Germany is this fiscally conservative nation that's holding back spending right across the continent. Suddenly, if that debt brake is removed, you change the whole narrative, and you get people excited by the European story again. You get flows into euro, you get flows into European equities, and I think that ultimately the bond market will cope okay. This does not mean that we don't get more scares like we've had in France and Italy over the recent years, and they will come up again. I'm just saying that I don't think it'll be traded as a major kind of negative for the bond market. What's interesting is, as we go into this election, investors are determined for that euro dollar should fall again. We came into this year with the market very bearish euro dollar. That was a completely consensus trade. Sorry, bearish euro dollar. So they're bearish euro and bullish the dollar. And suddenly they're kind of being very disappointed in that trade. It's not working very well. It's going against them. And so many are kind of touting this idea that after the German election this weekend, we'll see a resumption of the euro dollar bear trend. I am worried that in fact the asymmetric skew might in fact be the other direction.
OK, so we wait for the results of those polls. Meanwhile, Mark, the question of the day on the MLive blog is, how long will TINA, the there is no alternative narrative, endure for US stocks? You say the narrative's already changed on US exceptionalism, so what's the alternative?
Absolutely, Lizzie. I'm glad you asked me this, because I got annoyed with my own team today for asking this question. I think TINA has been fatally wounded already. I think that the fact is that the Trump is changing the whole narrative around US markets exceptionalism. Far from paying a premium to be involved in a US supply chain, you'll now pay a premium to have business that is outside the US supply chain. And that is a very, very important and subtle shift. Also, I think the fact is that US companies being so expensive, part of that premium was that they were going to be the sole beneficiaries of the AI productivity boom. And I think that is very much being challenged. People are realizing that the beneficiaries of that will be many different companies around the world. And therefore, the productivity boom is global. And therefore, why not go for stock markets that are cheap and discounted because they're perceived to be missing out in that? So I think both tariffs and the changing narrative around AI means that US exceptionalism is over. There is definitely an alternative.
Very quickly, Mark, how does that show up in the FX space? If we're talking about this dollar exceptionalism going away, but Europe also weakening, what happens to euro dollar?
I think dollar weakens in 2025. It'll be a volatile path, but I absolutely think that Donald Trump flagged the green light to start the dollar bearish trade last week when he undermined the Fed right before a hot CPI. It is a dollar bearish year.